What's up, guys? It's July 19th, 2024. I had a bearish trading range day. I think in the past I would have said a bear trend day, but in reality, there's more trading range price action. Yeah, the market moved lower. There's more momentum from yesterday. There's no doubt. We've had the breakout here, pull back, breakout, and we're trying to pull back. So a lot of bulls don't make money here, and there's a gap right here. So bulls got a gap in a bear trend? I don't think so. I'm talking about this gap. I'm gonna delete this, but that's the gap I was talking about. Oh, that's the squares for I was just doing trend and making squares. Let me fix that. I don't understand what I've done. Oh, okay. That's the gap I was talking about. Bulls don't make gaps in bear trends. Maybe we break out below here. They did, but then bulls reversed higher, testing the high of the gap. What's the higher time frame breakdown? I wanted to delete this line with you guys. It's been bugging me. There's no point in having it now. I was reading the trend lines, and Al says trend lines are there just to help us temporarily, but we don't have to keep them on our charts. So this trend line has been on here for a very long time. I am gonna miss it. I wanted to delete it with you guys. This trend line worked for a long time. Okay. Bears get another gap. That's 3 consecutive bear bars. Good for the bears, bad for the bulls. But it's the first gap bar underneath the EMA. So usually that's a good buy. But maybe we go sideways before we go up, which I'm really trying to force myself to think. There we go. That looks good, right? Gap to gap. And I'm going to keep adding these. I'm not going to take away the old gaps. And what I mean by that is these gaps have been closed. So, maybe we can make it smaller or shallower. I don't know. I'll think about it. But you guys will get... Okay, which one is this? Hold on. What have I done? Okay, 60%. 33%. Okay, so that has to be 60. Is this 60? Okay, yeah, so now we're rocking. So yeah, bears get a gap. This is a gap and this is a gap bar. Does that make sense? Bears would want to keep this gap open, so they would have to keep selling. But with this much bullish pressure, do we go up or down from here? Testing the high of here. This is strong selling. I think it's strong enough to get a second leg. But where is the second leg? Well, there's sellers sitting at the top of each bear bar, and there's buyers below each bull bar. The support and resistance. Are there more buyers or are there more sellers sitting down here? After 3 pushes up, like 1, pull back like 2, pull back like 3. Reverse into the EMA. Last time we reversed into the EMA, they had a huge outside bar. But that was early in the trend after a first leg. Now it's late in the trend, and this is a third leg. So it'll be interesting to see what happens. Maybe we go sideways for a bit. And the reason I'm saying we go sideways for a bit, because look at the 5-minute chart. Let me see if I can do this. Okay, I'm gonna flip this chart. How do you flip a chart? Isn't it like Alt Shift, Control 1, Control 2? Never mind then. I guess I'm not gonna invert the chart. Give me 2 seconds. I'm looking up how to invert it. I've done it before. It's just a click. Alt. Oh, it's Alt I. Okay. So this is what I'm talking about. Strong bull trend. Because now we flip the chart. So this is a strong bull trend. Bear sell off into the EMA. Look, we go sideways before we make a new leg higher. So the market went sideways. It didn't just bounce and go. If it bounces and goes, that's great. But it didn't later in the trend. The later the trend goes, the more sideways we're going under the EMA. So now if we take this 5-minute lesson, apply it here, late in the trend, do we go more sideways? Do we go straight up, or are we going to go down? It's not a test. I'm not looking for a right answer. I'm just trying to say, like, these are things we have to ask ourselves. Is this more bullish, bearish, or neutral? Okay, it's all I if you want to invert charts. So it's a bear day. I just wanted to use a bull example with a bull example on the 5-minute because price action is fractal, so we can use it and apply it in any time frame. Bar 1 is a range bar with a gap down. Bad for the bears, good for the bulls. Bulls got a leg up, pull back. This is starting to look like a double bottom bull flag. Bar 2 breaking out above the EMA, but we're not having it's a good close for this bar, but overall bad close in the range. Bar 3 races up, testing the high and sells off. What went from looking like a double bottom bull flag has just changed into a double top bear flag. So here's that double top bear flag, which could have been a double bottom bull flag right here. So it ends up selling. At the time, we don't really know what it's going to do, right? We're looking at a printed chart, so it's easy to say it's a double top bear flag, but it was more sideways and there was a bull leg here, so it is hard. We are trading under the EMA, the higher time frame EMA, so it's a bear regime. Market goes sideways for about 10 to 11 bars. This is the bottom of the range. Bar 12 is breaking out far past that, and then we go sideways again. Two-legged pullback into the EMA. It's a tough pullback. Bar 14 is the first bull bar after a breakout and it reverses sharply. However, bulls get their two-legged pullback into the EMA after that. Oops, wrong tool. Leg 1, opposite bar, leg 2, and then we sell off for another leg 1, pullback, leg 2. And something I caught on pretty early is that the bear trend is not strong because every new low we're taking profits, right? So in a good bear trend, we want to just keep selling, but every new low we've gone back to the EMA. So it's not as strong as we think it may be. It could be because it is coming to the second or third day of selling, depending on how you read these couple days. Like 1, push, pull back, like 2, push, pull back, like 3. Or maybe this is more sideways, we get a pop higher and then sell off again. But if we try and marry that into the higher time frame, maybe we are starting to go sideways for a few days before we go test the highs again. But this is strong enough for like 2, so I'm trying to remain as neutral as possible. I hope I don't sound like a crazy person, but there's always a bull case, there's always a bear case, and there's always a reason to not trade. And I think we have to see all three objectively. And I haven't been seeing all three objectively, which is why I've been getting slaughtered. So I'm trying to focus on being more objective. Because bulls are making money here, doesn't mean I'm going to make money. But every new low can be bought for a scalp into the EMA. If you buy bar 42 for a scalp, you're going to have to buy more here. Scalp out at your original entry and you make money on your second contract. Where are we? Leg 1, pullback, leg 2. And the bulls get a strong leg 1, leg 2. Leg 1, opposite bar, pullback, leg 2 into the EMA. Opposite bar, leg 3. Leg 1, pullback, leg 2, pullback, leg 3. Wedge top, going sideways. Testing this bear gap being put in right here. There's a bear gap here. Well, not really, but this is a gap bar. There's a bear gap here to here. And it sells off for another 3 legs. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Really small bar. Trend line, in terms of trend lines being broken, man, can you guys leave a comment in the bottom and tell me if you think my analysis is all over the place, or is there like is it more steady as I go through, or am I jumping around? Because I haven't been drawing trend lines, but I'm just trying to show you the different ways to count legs. So opposite bars are legs and trend line breaks are legs because we break the high of a candle. So see, if you were counting spikes, this would be one spike. Bar 39 breaks this high. This started leg 2. Bar 41 breaks this high. So that's the end of leg 2. Bar 41 breaks this high. So that's the end of the second leg. Bar 42 breaks this high. So this is the start of the third leg. And then bar 48 breaks that high. So that's the end of the third leg. And then the market goes range bound, which falls totally in line with the market cycle, right? 3 legs into a range. And if you weren't counting fractal legs, you can count them like this. 1, pull back like 2, pull back like 3. Sideways price action. This was hard to trade. I think it's best to sit out. If you can front run the market cycle, then what am I trying to say? The market's going sideways and bulls are making money. It's late in the trend and it's a leg 3. There's more chances to go sideways and to see lower prices. After bar 63, that was a trend line break. So we have a trend here. Trend line break, retest, sells higher. This becomes a second leg trap. We're testing this high here and we sell off and it goes sideways. The market was expanding towards the end of the day, but it was still really hard to trade. I think the best thing to do is call it early and save your capital and enjoy your weekend. I appreciate you guys watching. About 10 minutes ish here. Let me know what you guys think. If these breakdowns are starting to make sense. If they're not, if they're even clicking. Yeah, let me know. When I trade, I look for like 1, like 2 breakouts, and I look at the gaps within those breakouts to determine how long I can hold. Typically, I want 50 points a day, but I try and go for 10, 20, which I've been falling short because I got trapped. I'm having a hard time dealing with the ranges, so my focus right now is dealing with the ranges, and I'm acting right when it's time to act right. When it's time to sit out, I am acting wrong tremendously, if that makes sense. It's not like I'm making a mistake. I am making a mistake. Then I try and fix it by making another mistake. And then those range days eat my capital. So I just gotta get past that. I hope you guys are doing good. Let me know if you guys get chopped up or you're able to scout the range. I'll talk to you guys later. Have a good one. Bye.